Thank you for all the questions, comments, and feedback. A lot of questions regarding where traders can get the free courses, the 4-step method to high performance trading, and the free audio 7-step daily routine for high performance traders. Create the rituals and routines that will help you get 1% better every day. Bulletproof yourself with your confidence, your daily habits, your approach to the markets, to execute your trading edge in live time, but also to develop the high performance routines that will help you continuously get better to master the markets. The link for those downloads is below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're talking about day 4, Thursday, and interesting. This is where things can get interesting. Obviously, we had CPI news today, but more importantly, again, the process for me is a lot of the reason why I do certain things and my approach to the market is based on the school of hard knocks, having done things and learned things the hard way repeatedly over and over again over time. I have learned a lot of new things over the years and learned about what I need to do in live time in order to extract the money out of the market consistently. And one of the most important things that I have learned is that I have no idea where the market is going. Contrary to a lot of really smart people out there who seem to know exactly to the pip level where a market may be headed, I don't. And I also have the understanding that anything is possible. And after trading for several years, I believe I've probably seen and done almost every single thing that can be done and seen pretty much in the markets. I have a realistic understanding that anything is possible, which is why I don't predict, which is why I usually go to the screen and trade my session and look for what I call the easy trade. The trade that is the easiest, obvious setup for me to recognize, that I know that I can trade with the highest amount of certainty, and some days it may only just be, even a 25 pip scalp. But it's a 25 pip easy scalp, the easy money. And so that trade is going to be low stress, and that 25 pips, which again, if traders understand, you can scale that up. That 25 pip could be worth 500 times more than somebody's 150 pip trade that they hold on to for 6 hours. Because I am only looking for setups. Do I have a setup? Yes or no? My number one goal is to obviously protect my capital and to manage my risk, but I want to get paid. I want to get paid every time I go to the market. If there's a setup there, I want to get paid for my time, my effort, my expertise. And so I hit the trade and then I get off the screen, because it's not only understanding to hit the trade, know how to trade it, execute the trade in live time, but it's also understanding to know to manage myself, to walk away after, to make sure I keep that money. Most of the damage occurs when traders keep trading. Like, a game trader, I get this question all the time. Let's see you do live executions. Live executions will, I repeat this over and over again. You'll never learn how to trade by watching. And if that was the case, you'd already be trading and making a lot of money, because there's lots of people trading live on YouTube. So the belief, again, that makes you a better trader is completely false. You won't learn anything more by watching. You think you will, but you actually won't. You will never learn until you have your own skin in the game and you understand how to manage yourself in live time and understand actually what you are looking for. You don't learn that by watching somebody. You learn that through watching yourself, through managing yourself in live time, through understanding that it's your capital in live time, how to manage your stops, how to take profits, not get greedy, not hold on for more, knowing that anything is possible. You have an unrealistic expectation that a trade should go on forever, and you hold on to it for days and then wonder why you get stopped out. And, I could look at a lot of pairs today and say, I knew these were going to do that. But the reality of it is in between knowing where their destination may be and where it starts from to get there, the market may do a whole lot of other things to shake traders out of winning positions, to stop them out of losing positions. to eat into their profits if they get in late or chase a move, to make sure that they get lulled back into a false sense of trading continuously because of market movements, or to try and counter trend an all-in day. Just little things, and you cannot learn that by watching somebody. You have to learn that through your own experience and through your discipline to actually building a playbook of trade setups that you execute yourself when you go to the screen. So again, when we come to day 4, we've obviously had a 3-day Monday, Tuesday, Wednesday. Now, we're going to just talk about a couple of things today because I'm going to challenge some traders with some thought processes today. But this is why you need to have a process, and one of the reasons why I don't get in before the news, how each week can be different because of the news calendar, and how each week itself plays a template in a larger monthly cycle of Monday to Friday daily charts within that monthly cycle, and how the Monday to Friday cycle, each session helps build part of that template. So again, we had news on the calendar today. We had CPI 8:30 New York time, and some of the instruments are going to be different because of quarterly, monthly releases that are specific to those instruments. BOE, Bank of Canada, interest rates, unemployment for individual countries, RBA, obviously non-farm payrolls, the Fed, those sorts of things will affect multiple instruments. And then going to the screen with a big picture in mind based on this template. And again, the golden rule for me is I do not get in front of the news. I know some traders messaged me today telling me they killed it and they got in on a trade they were in when the market rocketed away with them. There are certain news releases that are potentially not as impactful, that some traders probably run less risk on trading. But again, there's plenty of really good trades. I just do not feel the emotional grip anymore to try and get in front of the market and gamble. Just my own personal choice. So 3-day setups, was there any? First bounce, if it's a news catalyst or a reversal collapse, if that was to eventuate, if we had a stop hunt type of news candle, or no news candle impact at all, then waiting for the New York Open. As I mentioned, the news was at 8:30 today. My next logical step would have been to wait if there was no setup for the New York Open. We had a first bounce opportunity on multiple pairs. And we'll talk about a first bar entry on some of them as well, and the difference in why I wait, and how a first bar entry can sometimes backfire for traders. Meaning that after the first minute, if it's an explosive move, traders can get in, but that on certain instruments can become a problem. Then obviously if there's a reversal, a stop hunt, or a scalp or trend trade. Now you'll notice in this, this is day 4. We're calling this day 4, and it's Thursday. Obviously I talked about this again, just in terms of simplicity. Monday is always day 1, but we can still be in the middle of a 3-day setup. And this is where people need to kind of think. This is where, again, we talk about highs and lows of weeks will often be the beginning. We can have a peak formation low on a Friday. And although Monday's our new week, our new first day of the week, we still can get a 3-day setup, Monday, Tuesday, Wednesday. But we can have a 3-day setup that goes from Friday, Monday, Tuesday. And I know that's where traders get confused, but do you notice right here, I talk about a 3-day setup, So we can have a 3-day setup on day 4, Thursday. That's the 4th day of our trading week. Imagine just an easiest way to imagine this is that imagine that the smart money, the market makers, whoever you want to call them, imagine there's no money in the market at all. It just appears that way based on previous price history, based on what we see on our tea leaves and in our charts. There's nothing else really in the market until Monday morning. And so the reality of it is that Monday is day 1. It's the first day where money comes back into the market. We'll run through the pairs, and in the interest of not talking too long, we'll just again, I'll go through these and then you can run through these on your own charts. I'm going to use the hourly charts just to paint the bigger picture, and then we'll talk about today's specific CPI release. So Monday's our day one. I talked about day one. We spoke earlier in the week. Go back and watch the day one video. Monday sets our initial high and low of our week. That's our high and low range. That's, again, imagine there's zero money over here. It's just an illusion. We can, do whatever, but Monday sets our high and a low. No previous day's levels are broken out of. Notice I said broken out of. We have a high of the day and a low of the day. Now, we're not going to talk about day one trades or anything. I'm just talking about the whole big picture. Day two broke out and we got day one shorts in the market. So again, day two, that's our Tuesday, Monday, Tuesday, we had day one shorts in the market. What was a day one short? That's a market that broke out and triggered breakout traders on day one. Day two. And Wednesday traded inside, but into the close, triggered the high of the day, stopping out possibly day one shorts. So they broke the high of Tuesday, and then we proceeded up in 3 peaks, which we talked about in our other videos, back to the high of the week. Now it's day four. It's day 4. Monday, Tuesday, Wednesday, Thursday. But now here's where I'm going to really play tricky games with you. The low of our week is Tuesday. Tuesday is a 1, 2, 3 day setup. Tuesday, Wednesday, Thursday, and it's also a 3 session setup from Asia, London, and New York. Now, we've talked about that. A 3 session, day 3 setup is our 33 trade setup. Day 1, day 2, day 3. Tuesday, Wednesday, Thursday. And this is why it's important as the week evolves that you have your thinking cap on and you're able to identify the possibilities. We have our 3 peaks. We have Asia. We have London and then New York. And on our 15-minute time frame, we have an engulfment for an entry to short at the high of the day. We have our break in structure inside, except we had CPI on the calendar. CPI 830 release. So here's the thing. If I want to short the high of the day, but I can't, and my thesis is that this is going back to the low of the week, high of the week, low of the week, a 3-day setup into the news, a 33 setup into the news. My next possible opportunity after the news is a first bounce trade, meaning that an explosive move that's going to continue the original downward move. This is day 4. It's not a Friday night. It's a day 4. And so this trade may continue to go. There's no expectation that all of a sudden this market would come down and go back, straight back up in the next hour the other way. We have a 3-day setup that's a sell high of the week. They've already triggered the high of the week for the sell high opportunity on a 3-day setup. On my 1-minute charts, we have a whole block of volume trapped above the 100 pip box at the high of the week. If I was looking for an opportunity to enter this market, again, first bounce would be the cleanest opportunity. But when we get a break like this, as I explained to a trader about the gold trade, is that when it breaks on this first minute and we're exploding back to the low of the week, in my head I'm already thinking at a minimum a 1, 2, 3 on the hourly chart. 1 hour down, 2 hours down, 3 hours down before a reversal. That's different than a stop hunt in a consolidated market. First hour takes out the low of the day or possibly even the low of the week, maybe on day 2 or day 3. Or even on a Friday, it blows off, takes it out, and the next hour reverses, which means that the first bounce trade typically will conclude the move in a 15-minute sense. So we'll have another 15 to 45 minutes where the market extends the range, hits the stops, and starts the reversal, and the next hour reverses into the New York Open. That can happen in London. That can happen in Asia. Now, that's my thought process. If any of these, if you were to have taken a first bounce opportunity, Canadian dollar gave 50 pips. Again, the timing, understanding the timing of these 15-minute rotations as we head into the end of the hour or into a new 15-minute cycle, I would be locking in the money on an explosive continuation move. If the market comes back in the new hour, 1 push, 2 push, 3 push, consolidation to continue the original move, I will get in again if I would chose to continue to trade. This is not a reversal type of situation. So again, trading in the direction of the original momentum. So again, emphasizing that this market was an all-in directional move after the news. Day 1 set our range. Day 2 expanded the range. That became our initial balance. Again, go look at day 2 video. And then they proceeded to auction back higher into the high of the week. Asia, London, New York. 3 sessions, 3 rise. Could this have been taken? Here's the situation that I challenge traders with. Today it didn't happen, but what happens if you get in and the next time they put a wick up through the high first before taking it all the way down? My question for you is this: how much size will you put on that trade? How much size are you willing to put on that trade just to get in early? And how much heat can you take if it goes back up to the top? That's my point. So I'm quite willing to wait and let the market explode on that first bar if it's heading down towards the low of the week. How much size could you put on by just getting into the market? The market then retraces 30 pips into your position. So again, letting this market trade first before looking for the first bounce opportunity. Typically, I'll let it trade 15 minutes if I was looking for the continuation move. Once this market takes out the low of the week, again, locking in some money. But if you're convinced that this market could be going for the next 3 hours or having a directional move for the entire session, getting back in and again managing your risk, keeping that opportunity tight and using the timing window, new hour, 15-minute rotations, the New York Open. We're heading into the new 15-minute bar when we get our first bounce entry, second hour, for another 50-pip move. Again, the Canadian dollar, as most pairs did today, followed through in the direction of the CPI. I'm going to go through the other pairs, and you can walk through these back on your own, but I'm painting the templates. We'll walk through the process again. Day 1 sets our high-low. Day 2 expands the range for our initial balance on the Swiss franc. We get day 2 shorts are in the market. We broke Friday's low on Monday. So we had day 1 shorts in the market on Monday. We established our high low. We had a high day trade on Tuesday, session trade that expands the range and triggers day 2 shorts. Day 3, we get a creeping trend down low that triggers day 3 shorts and puts in our low of the week. The market then proceeds to auction up to the previous day's high, which we talked about in our previous videos with our little whiteboard drawing, where a 3-day setup can auction back to the previous day's high for a retest back down to the low of the week or a retest back to the high of the week in a long trade setup. Day 1, day 2, day 3. There's our initial balance. We've broken that. On day 3, we've pulled back and hit stops. So again, when they break out in the U.S. session, again, you'll see the engulfment railroad track at the high of Wednesday's high of day. We have shorts in the market on day 3. Day 3 shorts that they've stopped out before exploding down through the low of the week. Swiss franc, great first bounce opportunity into the second hour again with an explosive move like this in a fast-moving market. Traders, I'm not often a big fan of selling it right into the low or buying it right into the high unless it's in a new 15-minute bar. But the new hour gave us a clean opportunity for a nice 75 continuation pip trade after a little peak formation pump and dump into the end of the hour. Japanese yen, day 1, that's our high and low. Day 1 shorts are in the market on Monday. Break of Friday's low. Day 2 shorts in the market on Tuesday. Break of Monday's low. We then have our initial balance, our high and our initial high and low for the week. We had the short squeeze reversal into the New York Open for a 50-75 pip trade that came back up towards the high of day 2, didn't quite get there. And then we had a high of day opportunity right at the US window on day 4 for the continuation trade back through the low of the week. Our geometrical structure, again, this is a day hourly chart. Walk through these. You can go and look at your 1 minute charts or your 5 minute, wherever your entries would have been. But again, the setups were there for the explosive moves. I don't know what they're going to do. I have no idea. It could have exploded vertically through the high. It might have done that, which is why I wait. It didn't do that. There was no wicks. There was no explosive movement upwards. It broke down to retest the low of our week. I said this in the previous video. We hadn't broken the front side of that move. We have a trend line break, breaks the front side, and you'll notice 1 peak, 2 peaks, and a 3 peak for a head and shoulders rectangle and the explosive continuation trade back through the low of the week. These are all 3-day setups where day 2, Monday, Tuesday, day 2, they put in our high-low, our initial high-low range, and then they expand the range on the downside. Day 2 becomes our low of the week. They trade into the low of the week. Day 2, 3 peaks. Day 3, the explosive continuation back through the low of the week. British pound, this is a 15-minute chart. I'll let you walk through your own charts. We had the explosive day 1 breakout. I said don't counter trend a strong day 1 that's still establishing the range. It sets our initial high and low. They expand the range on the upside, and now we have our high and low of the week. One of those extremes will tend to hold. I repeat, 80% of the time, one of the extremes of the initial bounce will tend to hold as the high or low of the week. Day 1, day 2, day 3, Tuesday, Wednesday, Thursday. Don't know where it's going to go. You hear me say this all the time. I have no idea where it's going to go. But when it explodes on the news, I'm not going to fight the trend. The initial trend coming into this move was a big vertical move on payrolls Friday that tapped out the low of the week. That became our day 1 into the new week. Day 2 was Monday. Day 3 was Tuesday. Day 1, day 2, day 3. Monday, Tuesday. Initial balance. Tuesday becomes our high of the week. Day 1, day 2, day 3. A consolidation and an explosive vertical move targeting the high of the week and the trend continuation. Trend continuation. This one was a bit harder, but again, you can see where the first bar entry in this particular pair, traders would have been okay hitting that trade. Now, first bounce entry was a little harder because you're forced to chase the high of the day as an entry, which I wouldn't myself take that trade. Obviously, it worked out for traders. The first bar entry was probably the best opportunity, but in several cases, as I pointed out in the previous pair and on gold, we'll see, you just never know what's going to happen, which is why I look for the easier setup. They're all exploding. They're all moving. I'm watching all the pairs. After they've done a pullback, I feel much more confident about entering the market when I know I have a bias that this market is not coming back. Being able to be prepared heading into these trades. Weekly highs are where this market has the minimum potential to go to. So obviously we had the previous week's high of week, but we had an overall high of week. We came out of an explosive move. The market had put in a double bottom ascending triangle for a geometric expansion. And so knowing that, you could only be trading in the direction of the explosive move. And at 3-day setup, we have 3 days of rise. We have three days of drop. Day 1, day 2, day 3 into the news. I talked about if you look at the day, and all these pairs did this yesterday, we have a market that in the U.S. session was low-hanging fruit and a continuous creeper into consolidation. This is order flow. This is an order flow type of day when it creeps down into that consolidation slowly all session. That's an explosive order flow setup. And for my friend Sanj in the UK, I know that Well, it's hit our measured move. I had a measured move target of 2017. Hasn't quite got there yet, but it's on its way. We'll talk about that in a second. But we had the explosive move on payrolls Friday, similar to the pound, day 1, day 2, day 3. Monday, Tuesday established our initial balance. Tuesday forms our high. Inside day, three peaks on Wednesday. And then our day 3 trading back into the breakout trade from Monday, putting in a low in place, a little 1, 2, 3 prior to the news. And again, let me emphasize, I have no idea what that's going to do. It could have collapsed straight back down through the low and fell all the way back down into the payrolls Friday. I have no idea. But when it explodes vertically back to the high of the day and the high of the week, I'm looking for the first bounce trade. A geometrical range expansion of this high-low weak situation takes us up around that possibly 0262 area. And another reasonable expectation being the end of the week tomorrow is that this market could do a 1.5. It's already done a 1.5 expansion of this range. We'll bring this up. And so targeting that 102.62 area is a possibility for a continuation into Friday. No idea. Don't know. I won't know until we see that set up. But we have a 3-day setup into the high. Friday, Monday, Tuesday. Our initial balance sets up our high and low for the week. So again, talking about day 1, day 2, day 3 trades in our day 1, day 2, day 3, Monday, Tuesday, Wednesday. And then a 3-day setup Tuesday, Wednesday, Thursday into the news. Euro first bar bounce. We had a first bar continuation, but again, I won't hit those. I'll look for the first bounce. This was a bit harder as they ran away, but the thesis being that you could only be long. I look at the hourly rotation as my next opportunity. Hourly rotation, we're already into the explosive move. New York Open should not have any impact on this other than to continue the move. But if we're in this trade on a first bounce in the new hour, looking to take money off the table as it continues higher in this auctioning process. So this market actually proceeded to go 100 pips from this first bar entry. Just past that first bar entry, we roughly filled around 100.75 in that area, 80, and we're now targeting towards the end of the session up there, still moving as we speak. And I talked about not counter trending the explosive move. Some traders are going to sit around and look to sell the high for hours, but I'm talking about this initial trade in that 12 candle window, locking in the money and not counter trending. Will this market get up towards that 2062 area? Sure looks like it might get up there. Hopefully for Sanj it does. He's raking in the cash. Now, oil, we had a high of the week on Monday, so a little bit different setup. I talk about oil not having the same sort of response often to news, and I will look at that. But I did not see anything that was really that appealing. I saw the opportunity on gold today. We had a day 1 set our high of the week. Day 2 broke down. There's our initial balance, and we continue to auction lower on day 3, day 1, day 2, day 3. We've worked into the low of the week and on day 4, and we've had explosive trading range activity between the high and the low of this session. So we had volume trapped down low that exploded out with a break in structure in the London session that exploded out on the US Open on the news, but then proceeded to auction sideways in a trading range for the bulk of the rest of the session. Day 4, but day 3, Monday, Tuesday, Wednesday, formed our high and low of the week. They traded into the low of the week for the explosive reversal on low-hanging fruit. Wasn't really something I was looking at today. And the reason why I was focused on gold today was exactly the Tuesday explosive move. We came out of a consolidation of a weak range, a weak high and low range, and that targeting now for a measured move took us up well past the second expansion, but initially the first target was the first expansion, sort of in that 17,350 area. And so we had the big move on Tuesday. This is not a pump and dump. This is a breakout trending market. Day 1, day 2 sets our high and low. Day 3 expands the range but stays consolidated. We have a bull flag rectangle in the middle of an existing long trade. Thursday, Friday payrolls went higher, consolidation, explosive move on day 2, consolidation. The thesis is that this will continue for a range expansion move of that high-low rectangle. We had the explosive move on CPI, and I talked about traders will look to trade that first bar explosive move, and with gold there's a 75, almost 100, 75 pip pullback before it continues that long direction. Now, when I see that explosive move and I'm looking at this on my hourly or even 15-minute chart, I wrote right on my post from my trade, do not counter trend. Now, 3 peaks is what we would look for in a reversal. However, this is a trap, especially when you know it's an all-in. I'm thinking at least 1 hour, 2 hour, 3 hours of continuous long directional bias, a 1, 2, 3 before they may even put the high in place. The 12 candle window, 3 hours before they may pull back, but I would not be looking for any kind of counter trend reversal. We make higher highs. So, great question from a trader. Why didn't I take the 844 candle as a first bounce? The main reason with gold is this. When I see the explosive move, I'm looking for an end of hour opportunity. And when this market trades and forces me to buy up in towards the high, it's a guarantee that we're going to see a pullback. The first thing I look at after any high volatility instrument movement after first bounce is I always redraw my highs and lows and start the process over again, meaning we work from the high and the low. In an explosive move, the market comes back to the high before engulfing. Traders are shorting an explosive breakout in a trending market. They auction down in 3 pushes to the end of the hour. We get our engulfment pin hammer right at the end of the hour at level 1 in the new 100 pip box. The thesis is that this should go all the way through the high of the day, 25 to 50 pips. And another excellent question, how did I choose my exit? The reason I exited at the end is we got up to double zeros and we're at the end of a 15-minute cycle prior to the New York Open. What I didn't want to be doing, and again, a 75 pip move, I locked in 70 pips in 30 minutes, less than 30 minutes, straight up through the high. What I don't want to do, even if this market was going to continue to go higher, is I want to take the 90% of the money off, leave a trailer. But what I don't want to do is have it pull back 25, 50, maybe even 75 pips into my trade at the New York Open before continuing long. That's still an explosive move, but I want to lock that money in. This is easy money. They just gave me that money. I'm taking it. That's my mentality. I'm not trying to hold on for 200. I'm trying to lock in and squeeze the maximum amount out. Sometimes you're going to get, the high. Sometimes you're going to miss out on another 100 at the same size. But my question for you is, how much do you want to give back once it's yours? I want to take it. I want to lock it in. Sometimes I'll recycle that. But in these markets, even though the bias was for an all continuation session to be unidirectional, I don't want to continue to trade. I don't want to run the risk. I want to lock in the money. I got my trade. The money's in my account. I'm going to walk away. S&P, NASDAQ, and US 30 all had explosive moves vertically. And I will say this, different setups, different templates, but this explosive move on a day 3 from the high of the week, I keep repeating this, do not counter trend. Recognize a market on a day when it is not going to come back. This defies all logic with your smaller time frame technical indicators. You could put a 4-hour chart on here and it wouldn't matter. So people talk about aligning up all their time frames. And somebody bought this maybe on the close a few Fridays ago and they've been long and they still came back and got that trader. somebody shorted the market maybe, somewhere on, Wednesday or Thursday, this explosive move, which is why I don't hold on to stuff. I want to take it off the market, but this defies logic to people's technical indicators, to their time frame analysis, lining up every single time frame, hourly, 4 hour, all those things. And when you have an explosive move like this that defies logic, you need to be able to recognize a market that is not coming back. This market moved a couple thousand pips today. So somebody who's trying to counter trend all day because the market's gone vertical, thinking that it's going to come back, inadvertently may have gotten crushed. So timing wise, again, something like this S&P, we're waiting for 9:30 New York time. 9:30 comes down in 1 push, 2 push, 3 pushes, gives our little pump and dump into a very explosive, strongly trending move. I'll zoom in on this. Little engulfment pin hammer, 1 push, 2 push, 3 push. Major quarter level, that's a major quarter level, not a 25 pip box. That's a 250 pip box for an easy, explosive continuation with trend trade. That's, again, day 4. So on a day 4, we can have a 3-day setup. We had Monday, Tuesday, establish our high and our low. Tuesday became our high of the week. They auctioned down and create order flow Tuesday, Wednesday, Thursday into the news. 3 sessions, the 33 setup in for the explosive news catalyst trade. First bounce, opportunity. Some traders choose to position themselves just to get into the market. They'll add into their positions as the market moves. There's multiple ways to trade this, but the 3-day setup was there on day 4. News was the catalyst. We had no other news really this week that was significant. I have no idea where the market is going. Completely willing to tell you that, not predict. As I mentioned, I know there's a lot of gurus out there that know things where they're going to the pip. I don't. But I do have setups, and I know that anything's possible. Sometimes, my mood, my feeling about the market, all of those things, like some traders asked why I didn't hold on, and I mentioned that. I just, I got an explosive 70 pip move. Some days that could come back 50 pips into my trade before continuing. I don't want to sit through that. I want to take the money. And often I don't necessarily want, once I get that, I don't want to continue to trade. I just, it all weighs up on where you're at on the day in your headspace. Do you really need to hit every single trade? You don't. That's entirely up to you. Anything is possible. Do I have a setup? Yes or no? Be prepared when you go to the screen. Really be prepared. Today was easy. I just narrowed it down to a couple of instruments. I didn't even look at oil. I wasn't looking at the indexes. I was looking at the euro, and I was looking at gold, and I was looking at the Canadian dollar, only because those were easy for me. 3, I was only mainly focused on trading gold, but I had a thesis on both those pairs. I wanted to see how the price action traded out. After the gold trade, I shut it down, got on with my day. I want to make sure I get paid. So that's the first thing, is I want to make sure I get paid, and I want to make sure I don't give anything back. And that's a big thing for a lot of traders to realize. You can keep trading to try and get as many pips as you want and hold on to trades and everything else. But the reality for me is I want to lock in the cash and get off the screen. There are some trades where I'm quite happy to let them run and hold on. News days, we're day 4, it's Thursday. We still have another day to trade. If it was a Friday night, I probably would have held on to that for more. But, again, decision I made on the day, quite happy with that. Hit the trade, get off the screen, don't do anything else that could end up locking you into something that maybe could become a problem, could end up maybe undoing some of the good work that you've done. These are all the performance psychology side of things that traders are always challenged with, and you need to keep making sure that you are not only trading, but you're observing your behavior, you're the risk manager, you're the trading coach, you're the psychologist. You have to be all these things, and that requires you to be coming to the screen in that right headspace to execute, acting in your best interest, be at your best in terms of hopefully identifying the best setups, and then also having the awareness and the gratitude to take what the market gives you and recognize the type of day that it is, the type of opportunity that it is, and walk away when you're done. Keep it simple, traders. Hopefully you got value from today's video, traders. Day 4, we have day 5 tomorrow, end of the week. Massive week. Keep it simple. Keep getting better. Thank you for all the questions, comments, and feedback. Lots of gratitude. Really appreciate it. Thank you. And may the markets go with you.